Hi, Ron. Welcome to non-farm payroll data from the United States, the Bureau of Labor Statistics, in about 15 minutes' time. What a night that was, eh? The inevitable fallout between Ego Musk and Ego Trump was somewhat inevitable, as we've been saying for a while, as many people have been saying for a while. When two egos like that clash, mutually beneficial for a while, it's always going to end in tears. Obviously, all sorts of conspiracy theories have been swirling around this morning. I've been reading people saying, "Oh, it was all a setup, a bit like the assassination attempt. It was just to divert attention away from the real hard data that Trump kept saying yesterday was really positive when he's with the German Chancellor." That was cringing. He's talking with the German Chancellor yesterday. I watched most of that for my sins, having watched a real performer earlier, Miss Lagarde, dealing saying basically we are getting there, we are virtually there. The ECB is done, Euro rallied, German bonds reacted as well, and then that was all overtaken by the fallout of the big bro romance of the last 4 or 5 months, come to a catastrophic end. Chat this morning that some of Trump's people have set up a call with Musk later on today. Obviously, it's still quite early in Washington and wherever Musk has gone down to. Probably gone down to Texas. But yeah, I can't see him being at Mar-a-Lago this weekend. But what a carry on! What an absolute carry on! It's it's egos, it's businessmen trying to do politics and doing it as in a very sort of headline grabbing populist way, and the devil as ever is in the detail. Remember, Musk was brought in to try and cut waste, as they say. And again, great headline to grab, isn't it? Let's cut government waste. Everybody likes that. Some of the programs that were cut were very controversial. And $2 trillion we're talking about. There wasn't $2 trillion to cut, basically. Then it went down to 1 trillion, and apparently it's around about 250 million, you might say, but still, still significant amount. Anyway, enough about the politics. The reason we talk about it is because it's really important. It has market impact in events, and if obviously you are a Tesla shareholder, your value, the value of your shares went down 14.78% yesterday. Massive hit for the share price here. 14.26 they closed down. Lululemon also had a big hit yesterday. Nothing to do with the Trump Musk fallout, but they had a very bad hit. Broadcom earnings were pretty much in line with expectations. Stock markets closed down yesterday, 59.39 for the S&P 500. But more all on that as we go through the charts. But basically, I've got the Forex Factory calendar on here, and you can see the trending as we've been talking about lots of the jobs numbers. Like we looked at the JOLTS numbers coming down. We had that weak PMI data early in the week. So we've had that hat trick of weak US data today, this week that's put pressure on the dollar. Dollar's being pressured. It's bound. We'll look at the charts in a minute. But guys, as ever, if there's anything you want me to look at in particular around non-farm payroll, a particular asset or a particular reaction to the news, do let me know. But the the continuing trend is obviously this lowering of expectations. We take off the forecast, we look at the real numbers. You can see how we've started to lower down through 2023, 2024, and we've been relatively stable. It's hung on. So this has been the issue about the strength of the jobs market in 2025. We'll see what the number looks like today. There's quite a wide disparity. We've got a 125,000 average. Some was talking about, if it comes under the 100,000 level, that mightn't be. That might not be that much of a surprise, given I'd say this pressure they've put on migrant workers in the US, and so the unemployment number could still also hold up. But we'll look at our calendar as well, because it's got a bit more detail in than this. The Forex Factory one has. So in our calendar, we got all the lower details as well. So if we scroll down to today, and then we'll look at next week after obviously the data's come out. So Friday the 6th, it's the 81st anniversary of D-Day, where European and Allied troops started their fight back against the fascist Nazis 81 years ago today. So there we are. So here's the devil. So the detail in the investing.com calendar. So headline 126,000 here on the numbers. Payrolls, earnings, which have held up really quite strongly, 3.7%, so a minor tick down from last month of 3.8%. The work week remains flat. Earnings for the month 0.3 of 1%, so a bit of a tick up potentially. So see how it all comes in, and then the detail, the government payrolls, which obviously we just talked about Musk. They've been pressuring, but that didn't go up. This weakness in manufacturing, they'll like to see some positivity in there. The administration, and then what this non-farm payroll number looks like. And the participation rate as well. So some key numbers. The other number that I look at in particular is this wider measure of unemployment called the U6, this which is now back. It's under 8%. It's been coming down quite significantly, and it was looking quite good. But we could still have this sort of oxymoron potentially as these numbers roll out over 2025. Some analysts are saying where we have unemployment rising and jobs also rising, but no pressure on inflation. So inflation's looking relatively benign still as well. So let's see how all this pans out. Obviously, one of Musk's the big reason for the fallout was the big beautiful bill, as Trump and his allies have called it. Musk is it's a step too far. It's too much adding to the debt. Scott Bessent is adamant that they can get that debt down. He's focusing on that 10-year yield, getting to that 4%, but we're way over 4%. We closed 4.43% last night. Let's check that one whilst I'm quoting it. The 10-year Treasury currently at 4.4, so it's 10% above our target rate here for the key thing that Scott Bessent, the Treasury Secretary, is looking to sort of focus on as far as the data is concerned out of Wall Street. But he doesn't really. Obviously, Trump would not looking for re-election. He's wanting to get things pushed through as quickly as possible, and he's not that focused on the stock markets like he was in the first term. But anyway, he's more excited about the World Cup, the Football World Cup coming to the US as well. So anyway, let's have a quick look at the markets. This is the 15-minute time frame. We'll skip through the 15-minute charts for you today. So Europe. Yesterday we had that spike and that eyeing of the 115 area after the data yesterday, and then we sort of declined into close, and then we've declined again today. So from this rally through to test the 115 area at 114.95, we're all the way back down, testing the next big round number, which is 114, to the 114 area there. So we're going up 100 pips from yesterday's high, and we're back through this sort of pivot area where we were earlier in the week, Wednesday and Thursday, through this 114.20 zone we talked about. Again, we remember we talked about that last week, weren't we? So we had a move up yesterday. That's down into close from the fracas that ensued overnight, and now we've been weaker today as the dollar's received some sort of lift, and we've seen that across all dollar crosses today. So the dollar's a wee bit stronger today. Sterling 135.45 at the moment, but we did get through 136. We hit our target yesterday. We remember we were long cable yesterday. I can't remember how pips we made on that, but we closed it out. What was the numbers? I've written down on my book here. It's on my chart. But anyway, we got in here. There we are. We got in here at 135.54, 9, and we got out at a target of 136.12. Literally, there we go. That's another example of a bit lucky. You could say, well, we certainly were, because we only went to 136.15, and our target was just 3 pips below that. So there we go. We were lucky that one. Let's not be let's not be about the bush. We ran to our target, but we'll take the gain, won't we? It was I have written it down somewhere. 42. No. 57.3 on that move. on cable yesterday, but we're giving all that back up, and we're back to that pivot area we've been talking about all week. That wrong chart. Sorry, we're back. Still holding the key 135, which is very, very important at 135.45 at the moment. We can see here again on the 15-minute chart, we're into support area, and we're sort of now chopping and changing between it as the 3 minutes to the data. So CAD 136.90, that's come back quite significantly, but we're still sub $137 CAD. Remember, we got the Canadian jobs numbers as well. Let me just take you back to that. Sorry. We've got the Canadian jobs numbers at the same time. So dollar CAD is quite often the one to trade. If we get a divergence in what's expected, or, one's really good, one's really poor, that's the sort of thing you want to be trading. Remember when you're trading, especially when you're trading Forex, you're trading the difference between the two currencies. So like in 2 minutes, if we get a good non-farm payroll, the market perceives it as a good number, we get a weak Canadian jobs number, that US dollar CAD pair is only going to move in one direction. The strong one is going to dominate. The weak one is going to be sold. So that's why it's one to watch. So we'll leave that one up. So actually, we normally look at the euro for non-farm payroll. But so what's happening here on the 15-minute? Well, so far ahead of the data, we are now long on the day, aren't we? The 15-minute chart is long. The hourly chart today is sort of been bottoming out. We've got a key. Here on the hourly chart, we've got a key cross here, the 20 hourly moving average crossing the 50 hourly moving average. So that's a key support area to the downside initially. So 136.70, watch that area to the downside as perhaps support as we go down. Are we going to breach 137 to the upside? So they're the two. Let me just put that line in there. There's a quick dotted line ahead of. So that's a key zone here. Let's change that to a little dash line, so it's just for that. So change the color default, so you can see it there. You can see it to the downside, and then what we do, scroll down. Where's this is just on the hourly. Yeah, yesterday's low took us all the way down there, so that might be worth watching as well. Certainly that one there. Sorry, the hourly low from this week was the red. Just put a red, horizontal red. Sorry, just bear with me. Still got minutes of the data, so always go back to the data. So here the two. So there's the upside of 137 support here. It looks like the data's come out and it's rising. It's given a bid to the dollar, so we're through 137. So the trend here you can see on the hourly chart has been with you, and it's continued to go with you. So if you were along here on the breakup here at 9 o'clock, you trade through non-farm payroll. You're not actually going to trade the non-farm payroll. This hourly chart was long here anyway. The stop loss was down this probably this 136.70 area, or initially it would have been down here, or even all the way down here. Depends how you're trading that, but it's gone long this morning at 9 o'clock. This pair, you would have targeted 137, I would guess, as just a round number in an area. So you might be out of that position waiting for the data to do that, and that's what's happened. So if we just go back to 5 minutes, let's just go back to the calendar. The headline has come in better than expected at 139, and last month has been revised down quite significantly. It's been revised down by 30,000 to 147,000. So we're a wee bit better than expected, 140,000. So that's still relatively strong. The administration will be quite happy with that, I would guess. Obviously, it's down here on this chart here, so 140,000 round about here. Sorry, I just closed that. Unemployment's remained flat at 2.4%. Let me just go back to our calendar. We'll get the updates for both countries now, and try and explain why that dollar CAD has moved like it has. So let's have a look at the updated calendar for today. So there we are. So earnings strong, average earnings better than expected, 3.9%. That's positive. Again, they'll take great heed from that, the administration. Headline 139,000. Manufacturing, no, that's the galling one. -8,000. The critics will hone in on that. Payrolls 140,000. That's positive as well. Last month was revised lower from 100. So again, it's another 20,000 revision lower. The non-farm payrolls headline, I say it's revised by 30,000 to the downside. The wider U6 remains at 7.8%, and the headline unemployment, as I said earlier, remains at 4.2%. So overall, that's quite a decent report for the administration, for the president. North of the border, Canadian jobs. Employment change was a wee bit better than expected. It was expected perhaps to turn negative. That's actually good news for Mr. Carney and his members of and his colleagues in the cabinet. Full employment is quite a significant beat as well. Participation rate is in line with expectations, and unemployment has ticked up by 1 tick to 7%. But you see the difference, quite a significant difference from 7% to 3.9%. Sorry, to 4.2% in the United States. So good data for Canada, good data for the US as well. So they were back to counteract each other. There we go. So we had the spike here, dollar CAD to 137, and then it sold off. The benefits of the Canadian data, I would guess, is moving now. Let's have a look at what the euro's done. Euro's 114. 114.27. So again, we had the initial move for the dollar to the downside. So we went through 114 and went to 113.85. Now, some 3 minutes after the data's dropped, we are back over 114, 114.28 to the upside. Where's our dollar CAD areas we were talking about? I can't remember what we were. Those lines we put, was it on this chart? Was it the 15-minute chart? Where did we put to the downside? So yeah, euro back, but we still, you know, the trend here, the daily trend today so far has been a better dollar. So we have got a move against the dollar really on that data, even that data as a wee bit higher. I'm just looking at some of the other news that's coming across. There's all sorts of news flying around as well. Obviously, that phone call that Trump had with Putin earlier in the week, the phone call he had with Xi yesterday as well, talking about this issue of the rare earths dispute. You know, that's still a problem. Student visas for Chinese students going into the US. He then had this big ban of students and all people from these 12 countries announced yesterday as well. So yeah, it's tomorrow. So it hasn't disrupted today's trend here on the euro. So we got generally a stronger dollar. Are starting to recover from the weakness we've seen all week. But if we more than all week, but if we go up to if we take this up to the daily time frame, you can still see the trend remains very much set to the upside, with big support here at the 20-day moving average all the way down at 113.13. As you see, we're still hovering around the 114 level. So although it's a down day today for the euro, that rally yesterday on the back of the weak US data that tested the 115 area has been given up initially. So we're sort of, again, the consolidation is still set here at these high levels for the euro. So the move up we had post Miss Lagarde's press conference, I suggested that the ECB have finished with it or coming to the end of their rate cutting cycle. That lifted the euro significantly. I saw its crosses as well. Sterling 135.45. Again, very, very similar pattern to the euro here on the higher time frame, the daily time frame. We're down again today. We've got the 15-minute chart. It's been trending lower this morning from early Asian trades, and then we moved lower. Tried to move up on the data, but may have found a floor. So it's pushed in a new low 518. See how that goes as the US cash session opens. So 135.18 is the low for cable today. 15-minute candle bodies have been a bit more resilient, 135.30, but the trend is in the short-term time frame, it's the downside. The daily remains bid to the upside. So the 15-minute and 5-minute time frames are biased to the downside. 5 minutes sort of running out of steam by the looks of things here. There's that 1330s low here, and we got sideways action here on that 5 minute from the movement of the actual data immediately, and it's all gone back to where we were. So you can see here the flat green line here is the 50 period moving average here on this 5 minute. So we're just now pivoting around that. So if you got some pips out of that first candle, that first 5 minute candle, well done. If you can trade that time frame. If not, it looks like we're continuing to a weakness to the downside. So the initial 5 minutes hoo-ha shenanigans took us to 135.63 to, as I say, 135.18, and now we're starting to continue to move down. But anything could happen. Obviously, there's going to be lots of Trump will be awake now. Obviously, he's been awake for hours. I'm sure there'll be more stuff in the background between Musk and Trump, but obviously they have this hugely public fallout was very, very significant. But anyway, no one's going to be wrong. There's massive clash of egos is always going to end in tears. But Mr. Trump is the president. President Trump, Elon Musk is the richest man in the world, and he spent an awful lot of money. Was it $250 million getting him elected? And billions worth of government contracts are under threat. So that has still got some room to run. Or probably, as with all disputes, it'll probably end up somewhere in between. But it was, aching watching Trump talk like Trump talk like he talks in the Oval Office yesterday. But see if they can have Buddy Friday yesterday. Him talking about D-Day with Maersk yesterday was the low point for me, really. But anyway, so sterling, dollar remains on its track today to the upside. So if you got caught trying to get that long, you're being caught out. But the trend continues to move to the downside. And we are now moving lower here on cable, euro. Similarly, pattern, dollar CAD. Interesting to see what's happened there. Yeah, so the reverse action there. So dollar coming back now to the upside. The biggest mover of the major currencies has been the Swissy. So there may be some major moves back to the other way. So Swissy now at 82.38, but remains very weak. But back over 82 and away from these 81 lows from earlier in the week. Swissy, if you're trading that, you need to get through today. Needs to get through here. That looks like a major resistance there, 82.35 from early in the week. I say quite a cluster of candles not moving anywhere there. So we might, that's going to be a resistance today if we're going to get back through there. That would see some more dollar strength, but that's going to have to get quite a move on momentum wise. We're already approaching overbought here. The RSI at 66 and it's rising, but MACD and signal line looks quite steady away. It's not too steep, so there may be some more legs on the dollar against the Swiss franc, moving through this 82.40 resistance zone, which is where we are at the moment. There we are. See that sort of area here. So the high took us to 82.50, so very difficult to get to 82.50, I'd argue. But let's see how that pans out. Dollar CAD we ought to look at. Aussie 64.89. So again, the daily trend, the downtrend today stays intact. The volatility of non-farm payroll, so we're drifting lower. How much lower can we go? Well, we've already obviously put in our low of the day. The cluster from earlier in the week took us down to this cluster we'd been in before, 64.70 zone. So whether we'll get that low with the Australians already starting their Friday and their weekends, I would question that quite significantly. So we may consolidate here. Certainly, we're not getting back over 65 by the looks of things, but who knows? But 65's the upside target for dollar CAD. Elsewhere, let's have a quick look. Elsewhere, crypto, Bitcoin 103, so down from the 105 area we were yesterday. But up from where we'd been. So yesterday we went all the way down into 100,000. I missed that move yesterday, late last night. I was out, as some of you know, I went for some half-price cocktails in the local pub last night, so that was quite good fun. Only I came back and took a trade. Perhaps I shouldn't have done, and we ended up losing. It was a short dollar yen, and it just rallied straight to stop loss this morning. But anyway, more on that in a minute. So yeah, crypto has come back. Interestingly, back to 103,000. So that was some buying opportunities. I would guess some people down here. So I would have seen that. That would have been, I'd have been one of them, I think, on that strong move. So 103 is key. If we go up to the just step up time frame, so 4 hour remains relatively weak, given that we're under the 50 period moving average here and the 20 period. But we're looking to have a test of that. The 1 hour. As we've just seen, has come back and triggered. Would have got to gone long here if you're trading that. Having been short yesterday, gone long there this morning at 7 o'clock. If I'd seen that, certainly with a rally, that would have had a target around about that 50-hour moving average to take some pips and points out of that. And that seems to be what's happening. It's ran to the 50-hour and then it's come back down. So support now is 103, 100, where the 20-hour moving average is, but that's still bid. And we'd like to see that back into this cluster area, wouldn't we? The 104, 700, 105,000 area over the weekend. But bid, see how the cash session in the US treats old Billy Bitcoin. Oil has had a good week thus far, 63, 64. We go up to the daily. I know not many of you trade oil, but it's a key asset one to keep your eye on, and we just continue to hold the break up from earlier in the week when we went over the 20-day moving average. A big strong candle on the back of the Saudi news about increasing production, price cuts, all sorts of some positive data around the oil market has been spilling out this week, but we continue to struggle to get over $64, 63, 65 again today. I say positive. We are now 1, 2, 3, 4, 5 days over our 20-day moving average, and more importantly, or just as importantly, 4 days over our 50-day moving average, and we're looking like a positive cross is about to happen as the 20-day moving average, or the 21 EMA, which is what that red line is. Looks like it may be crossing the 50-day simple moving average. MACD remains positive. RSI remains sort of just still in neutral zone at 57, but sort of rising. So there's not much momentum in the move for oil, but it is higher than it has been. So it's moved up from this 60 level, 61 level to the next level at $64 is the resistance. But it doesn't sound like a lot, but it's quite a significant move. But can it hold it? Moving to the upside, we might consolidate here as we run into June and the big driving season and the big demand for distillates in the US. So oil looking okay. Obviously, more to do with news coming out of Saudi Arabia, Russia, and elsewhere than and the US, obviously, than perhaps the US driving season. Majors we had a look at. Actually, let's just look at the dollar. We were the yen on, didn't we? We were. The 4 hour time frame, the trade we took last night, that was our we were entered here at 143 something. I can't remember what 143.50. I can't remember what it was, but we were short. Basically, we were looking for this to go back down to 143. Did the exact opposite, but that's trading for you. And we were stopped out, and we were out for 42 pips. So we lost 42 pips on that one, and we are now negative for the week. Actually, we were up 31 pips. Or 31 points, 31.3 points as of yesterday. So it's been a bit of a damp squib of a week, and we are now negative 10 points. We haven't had a negative week for a long time. We'll see what that's. We still got one trade open. That's the The Dow, so I might close out that just so I don't have a negative week, but we'll see. I think the Dow's still up, but I think that's gone negative as well, hasn't it? Entry. Oh no, we're in the money. So we're in the money on that from this entry. It seems like weeks ago now. 42,335. I think it was when we were 42,000. So there were 300 points to the good for the Dow. We'll see how that pans out for the day. I might close that off and start afresh on Monday so we don't have a negative week. But you got to take your losers, as I tell everybody else. I've got to be like a big boy about it as well. But really, yeah, we're consolidating. Just coming back to the stock markets there, you can see the 4-hour chart consolidating at highs, which is always a relative positive. We go back to the daily. It's been still again bids to the upside. The 20-day here is 42,000, and all-time highs is where our target level was or is. So we haven't quite got there, but we're having a positive day today from yesterday's down day and volatility, and big down day on Wednesday as well. Obviously, the Nasdaq with the impact from Broadcom and Tesla obviously had a bigger impact, down quite a significant down day yesterday, but that's all being bought back today, engulfing candle at the moment. So all-time highs for the Nasdaq 100 can't be ruled out at the north of 22,000 for the Nasdaq 100. So positive day so far. Obviously, this is still derivative business, guys. It's before the cash market opens in 40 minutes. So again, see what that looks like, but that's positive. And I say we closed all our stocks positions off. We've just got the Dow that's still open. There's a news item here just coming across the terminals here in Bloomberg saying that Trump and Carney, so the Prime Minister Carney of Canada and President Trump are actually talking at the sidelines of the G7, ahead of the G7 summit, which is interesting because obviously they raised the tariffs on steel and aluminum are still in place, and that was but a real bone of contention, particularly for Mark Carney. So they are still speaking. So it's a positive news as well. We also, I mean, the other thing that we had yesterday, obviously, the Japanese trade ambassador was in the US yesterday. Obviously, we had Mertz having to suffer that press conference with Trump yesterday as well. So Germany, obviously, the main economy in the EU. There was an interesting photograph of Mr. Mertz delivering the birth certificate of his German grandmother, Trump's German grandmother. I thought that brought a smile to my face. He's got a Scottish mother and a German grandmother, and they're probably all good immigrants as far as Mr. Trump's concerned. So anyway, up we go. Stocks, Nasdaq 21,727. The DAX, I say we got that all-time high yesterday. We did cool, but we're back positive again today. So DAX continuing to move higher, and the FTSE in the UK 8,800 has been recovered again. So we're just shy of all-time highs for the FTSE as well again, but the momentum is petering out, as you can see here with the MACD lines. You can see that what's happened there. The signal line and MACD sort of compressed together. Weakness of the move. See how, and then we've got the histogram turning from green to red as we've petered out at the top here. That's a very flat top, very small candles. FTSE not a great one to trade, but obviously it's following the other stock markets higher and trending higher, and some of the data in the UK is improving. That's certainly for sure. So let's see what next week brings as we move into full summer mentality. Everyone, it's just final chart. Let's have a look at everyone's favorite. Gold, 3,356 at the moment. So we've come back today. This was I was playing with this earlier. These are just some down wedges I'd got on the 4-hour time frame. You see this widening wedge here from the April to May low as we went under 3,200, and then we just sort of ambled our way higher. We had that big candle on the beginning of the week, and then it's sort of given up the ghost since then, hasn't it, gold? So just no little directionless so far, but the key support areas are still in place. We've got the 3,300 level as major psychological and technical support, and the 20-day average now. This is the other key thing we've seen this week with the big up day we had on Monday, was the 20-day moving average now has breached the 3,300 level and now sits a few dollars above that at 3,316. So going forward into next week, big support at 3,316 and 3,000 for gold. Upside target would be the close really of Monday's candle there at 3,385. So 3,385 would be an upside target. And then the weekly high we've seen this week for gold has took us to 3,400 and breach. So a breach of 3,400 will be key. But if we see any follow through momentum from the non-farm payroll data, which doesn't look like that's going to push through to strengthen the dollar trend remains to the downside. So let's just, I'm saying I haven't finished that last chart. Let's just go back to the major short-term crosses. So start with the euro, 114 now, interestingly. So it is more of a down day than it was before, isn't it? So we could just go step down again. So there's the hourly candles we were talking about earlier. Move down. So this current candle, which is coming to an end in 7 minutes, is quite a significant negative one, isn't it? So overall, it's been dollar positive, the non-farm payroll as far as the forex markets are concerned. But 114 would need to be breached quite significantly for this move up to be deemed weakening. But we have, as I say, from the highs yesterday, 114.95, within 5 pips of 115. We are now within 5 pips of 114 at 114.05. So yeah, dollar positive. And finally, let's just recap the data today for the Canadian jobs market and the US, more important, non-farm payroll data. Headline numbers came in at 139,000 compared to expectations of 126, so it was a beat. Last month, however, was revised lower by nearly 30,000 from 177 to 147,000, or K as the Americans call it. Unemployment remained flat at 4.2% from no change over the last month. Unemployment rate remained 4.2. The wider unemployment rate peaked to remained flat at 1 at 78,000 as well. So 139,000 was, as I say, better than expected. And earnings have looked quite strong, 0.4 of 1% compared to 0.2 of 1% last time, and annualized earnings now back up to 3.9% within a smidge of 0.4%. So it's good. That's a strong number. That's lifted the dollar. So this idea that we were going to go over 100,000 hasn't happened. It's reversed the other way. But overall, that's pretty okay data, given the 3 pieces of data earlier in the week, which were much weaker. The fly in the ointment certainly is this manufacturing payroll number turning. It's only 8,000, but it's this manufacturing, this big sentimental or significant from a sentiment point of view, and a headline point of view with Trump's populist politics. That's a significant miss there for that number there. North of the border, the Canadian data was also better than expected. Employment change nearly 9,000 from 7,500 last time. It was expected to be quite a significant decline, so Mr. Khan would be quite pleased with that. Participation rates held up, and huge change in, I didn't notice that before, massive change in part-time employment. So and switch from part-time to full-time. So that's positive for the Canadian economy as well. Unemployment, unfortunately, though, at 7%, ticked 1 tick higher, and significantly higher than is obviously in the US at 4.2%. So dollar CAD was a mover. Euro still to the downside. Dollar CAD 136.80. We're still under 137. We did have a go at 137, but that's been seen sellers at 137. but we are to the upside for the day, but we're now back to 136.80. So that's all fun on farm payrolls this time round. It's was quite a decent number. If we look at what's coming next week, we're into the second full trading week of June. Things start to quieten down. Obviously, we've had the PMIs, we've had the central banks this week as well. We got the key event next week is the US inflation data. If I just put the filters on, we just get rid of some of the countries for the week. I would take France with all due respect. My French friends, Italy as well. Take the Russian data out, Spanish data out, leave the Swiss data in. There we are. I'll take South Korea out, and we just make that. We want all our. We want to select all of that. But just to have the 3 and 4, 2 and 3 high impact events. So early Monday morning we have GDP out of China. We got out of Japan. Chinese inflation ahead of the European Open as well. On Monday, it's many holidays on Monday as well. I know my colleagues and friends in Cyprus are celebrating something very specific to the Orthodox Church, the Cataclysmos, the Festival of the Flood, particularly in Cyprus. It's Pentecost as well for many Catholic Christians as well. I say Switzerland's closed. Parts of Germany will be closed and parts of Italy will be closed as well. On Monday, jobs numbers out the UK on Tuesday the 10th. The headline on Wednesday is really the key event of the week, is the US inflation data. So is this going to continue to be weak and benign, as some of the members of the administration are talking? Lutnick, Howard Lutnick's actually on with Bloomberg at the moment. If you've got Bloomberg TV on, it's we'll see what he's got to say. He's a very good orator himself. A big supporter of the trade approach that Trump has been taking. So US inflation Wednesday the 11th. That's the key event of the week. PPI follows on Thursday out of the United States. We've also got a raft of industrial data from the UK that's been showing signs of improvement. Obviously, Thursday is also weekly claims. Remember, yesterday we had that big tick up, that high for 22 months, wasn't it? At 247,000, the weekly numbers, and the 4-week continuing unemployed rising over the 1.9 million. So we'll see what that looks like next Thursday. Say things are a bit quieter next week. German inflation on Friday, and the key Michigan consumer expectations and consumer sentiment to close the key events of the second week of June 2025. So have a great weekend, everyone. Take care. Be safe. If you're not with theproptrade.com, why not? Come and join us. You've got nothing to lose, really. You've got all sorts of approaches to trading supported. So if you're, wanted to take a quick run, the express phrase gives you a one-step challenge, but read the rules, guys. Read the what the challenges are involved. So a one-step means you obviously can get to a funded account just by being successful in this single step, but you do need to make 12% profit. Your daily loss is 4%, and your maximum loss over the entire trading account, however long it's take you, whether it's going to be 3 days, 3 weeks, or 3 months, it's up to you. And again, trouble is lots of people fail in this business, whether they're doing prop accounts, forex accounts, CFD accounts, futures accounts, whatever it is, because they're in too much of a rush, and they're just they have no risk management, they have no understanding of risk management, and it catches them out all the time. Slow down, calm down, find something that works for you, and trade the strategy and the time frame that fits you and your personality, and your approach to trading. Anybody can do this wherever you are in the world, female, male. Females make really, really good traders. There should be more female traders out there. But anyway, because it's a psychological game. Trading, my friends. So if you're a pro, you might want to look at the pro accounts. Bigger accounts, you might have more to invest. So 50,000 pro account starts at $355. If you're new to us, if you put in new 25, I think SC 25 wasn't working, was it? Gets you a 25% discount, gets you $90 off. So for $260, you get $50,000 worth of equity to play with. That's a significant account. Doesn't mean you should be trading loads of lot sizes. Two-step challenge here for the pro account, 10% on the first step and 5% on the second step. You have weekend trading allowed. You can trade the news with the pro account as well. And when you get to your funded account level, 90% of the money you make can be yours. It's not just 80%, it's 90% with the pro account. You can trade the news. Obviously, it costs a little bit more. The investment's a bit higher, but for $260, a $50,000 account, to get the chance of retaining, proving to yourself and to us that you can do this, you get to keep 90% of the real money. These are simulated accounts, my friends. Remember, you're not using real money, but when you get to the funded account level, the money you're making is real because you can withdraw it every Friday. And we've had lots and lots of withdrawals and lots of very, very happy clients. We're very open. We're very transparent. We've got nothing to hide. This is a business that people understand, and we're here to help. If you don't understand, ask. And we're very, very receptive to answering very, very quickly. So come and join us. Take care. Have a great weekend. I'll wrap it up. I talk too much as usual. I'll be seeing you next week. I'll be doing a couple of videos over the next couple of weeks with a colleague of mine I've worked with in the past, a very reputable trader and friend, really, I call him now. So join us for that as well next week. So take care. Check our social medias for the times of those videos, and I say we'll see you all again next week. All the very best, everyone. Bye bye.